Ginns. It's great to have you with us, Seth.
Thanks
Talk
for
to
having
us
me.
about institutional interest in crypto.
Yeah, no, we're seeing a lot of institutional interest in crypto, and I'll tell you that the One River Digital announcement is a big deal. It's really going to be the go-to place for an institution that wants to put 50 million, 100 million into Bitcoin and Ethereum combined in a fiduciary structure, one where it's a fund structure. They have Coinbase on the back end, Northern Trust. So I think this is a big deal, and they're talking about going larger, which is great. I also think the inclusion of Ethereum is fantastic because there's so much innovation happening in crypto beyond just Bitcoin. Bitcoin is awesome. We love it. But a lot of the innovation is also happening on the Ethereum blockchain.
So Seth, can you kind of distill, I guess, into just a couple of sentences here as to why institutional investors are willing to wade into this space in a way that they weren't willing to do, 2-3 years ago when we were talking about that magnificent rally in Bitcoin back then?
Yeah, I think a lot of that ties into what brought me into the space full-time at the beginning of this year. It's the fact that institutional grade infrastructure has really been built up from 2017 to today. That's institutional grade custodians. That's the rules engines to make sure that funds don't go places that they're not supposed to go. That's prime brokers. That's the derivatives infrastructure. This morning, CME said they're launching Ethereum futures, but we got Bitcoin futures in December of 2017. So I think it's really having the infrastructure in place and having come in place since the last bull market. But secondly, I mean, I'll tell you this year, the regulatory environment has been one of the biggest positive surprises. The Office of the Comptroller of the Currency saying that federally chartered banks can custody crypto. That's a really big deal. And we think we're going to see more on that front down the road that it is going to lay the groundwork to allow institutions to be comfortable that this is an asset class that's here to stay, and it has a lot of asymmetry to its return profile.
Seth, who all is buying? I mean, we know, is it high net worth individuals? Is it investment funds? Like, where's the marginal dollar coming from right now? We also know that some companies have put part of their treasury stock into Bitcoin. MicroStrategy has gotten a lot of attention. But, obviously institutions is a broad category. What specifically do you see where the most action is?
Yeah, so it's interesting. The action today, right now, is actually in hedge funds. So it's a lot of different types of hedge funds, macro funds, funds that are actually focused on fundamental equities, but believe that there's a diversification benefit to Bitcoin and crypto. That's where we're seeing action today. I was talking to a desk a few days ago that was saying they have $10 billion plus hedge funds that are either buying Bitcoin right now or in the process of onboarding. So that's really the money that can move quickly and the money that's coming in today. But then you look beyond that, we're talking to defined benefit pension plans, we're talking to endowments, foundations, obviously family offices, high net worth, as you mentioned as well. What's fantastic is you get someone like the insurer Mass Mutual putting 100 million of Bitcoin in their general investment account last week. And I was talking to another insurance company, and they're looking at it now. So you get this competitive dynamic, and I would presume off of what MicroStrategy and Square have done, putting Bitcoin on their balance sheets, you're likely to see more companies over time looking at treasury engagement with Bitcoin as well.
Well, Seth, I mean, you talk about the big money managers. One of the biggest out there is, of course, Guggenheim, and they've been putting through the desire to be able to buy crypto into some of their funds. We actually spoke with Scott Minerd earlier, all to do with the Federal Reserve, but he came out with this eye-watering, eye-popping sort of viewpoint on where crypto's going. Just take a listen.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Caroline, I think I'm gonna have to
400,000.
one-up
That had our
Scott
jaws
there.
on the floor. We had to sort of call him up and make sure he was meaning it. Like, yeah, talk to us about that 400,000 figure. How quickly does he get there, Seth?
Well, you know, the way we're thinking about it, and my involvement in Bitcoin started in 2012, and Coinfund was founded in 2015. The way we're thinking about it is, if you look at kind of the pattern recognition of Bitcoin's 4-year cycles, 150 to 250,000 looks like the base case. But here's the thing, it's becoming an institutional asset class this cycle, and that strikes me as being analogous to, you know, my background is in equities. When Tesla stepped up from the $25 to $35 range up to 150 to 350, and then it consolidated for a while, I think we could actually pull forward the next cycle, see Bitcoin go to 500,000 to 1 million, and then probably consolidate for a few years in that range.
Yeah.
But I think we could actually get there in the 21, 22 timeframe.